Today is June 28th, 2025. Outlook for next week. 1. Current market context. The S&P 500 recently hit record highs, driven by strong tech, the Magnificent Seven, and broadly improving market breadth. A ceasefire in the Middle East and signs of slowing inflation have enhanced optimism. 2. Key catalysts ahead. Economic data. Jobs reports, including JOLTS, ADP, and non-farm payrolls, are due next week and could sway sentiment. Trade and tariffs. Ongoing negotiations, especially around the 90-day U.S. tariff pause due July 8th to 9th, and possible Canadian trade disputes may add volatility. Fed policy speculation. While some expect interest rate cuts, economists at Morgan Stanley believe the Fed is likely to hold steady through 2025. 3. Market sentiment and risks. Investors are cautiously optimistic. Bullish sentiment and the Fear and Greed Index reflect mild optimism, but underlying confidence remains muted. Political uncertainty, especially involving Trump-era policies, poses a risk of sudden reversals. 4. Technical and strategic view. Some analysts, like Charles Schwab's weekly outlook, are slightly bullish for next week, expecting continued momentum, though technical indicators suggest a cautious tone. JP Morgan's macro model shows a high probability, 96%, of gains over the next 6 months. Summary. Overall, the balance of evidence supports a modestly bullish outlook through the first week of July. Key factors like strong earnings, favorable inflation trends, and technical momentum are supportive. However, be mindful of potential volatility from upcoming employment data, trade developments, and central bank commentary. What to watch? Thursday's jobs and ADP data could set the tone for the rest of the week. Tariff deadlines around July 8th to 9th, especially any news on Canada, might trigger swings. Fed signals, especially any shift away from a rate hold stance, could shift sentiment quickly.